Financial IQ number one, making more money. First point, personal financial statement has income, expense, assets, and liability. Cash flow quadrant has E, which stands for employee, S, which stands for self-employed, specialist, small businesses. B stands for big business, more than 500 employees. I stands for investors. Point number two, when it comes to income, the employee, small business, specialist, the self-employed, their money comes from the job and it goes to their income. The taxes are being paid here, so whatever is left gets paid to the expenses, your mortgage, your food, your enjoyment. Whereas the big business and the investors, their income is coming from the asset. Assets provide the income to the big business and the investors. When it comes to work, the E, employee, S, self-employed, specialist, small business, versus the big business or the investors, the E and the S, they work for money. They need a steady paycheck. And some of the people work for commission, whereas the big business and the investors, they work for letter C, cash flow and capital appreciation. That's what the big business and the investors work for. Cash flow, capital appreciation. Point number four, one of the hardest thing to get across to the employee, the self-employed, the specialist, and the small business is that the big business and the investor, they do not work for money. In fact, they work for free. The big business and the investors, they work for free. Fifth point, the E, employee, S, self-employed, specialist, small business, their focus is on income, whereas the big business and the investors, their focus is on assets. Point number six, one of the hardest thing to get across the E, employee, self-employed, specialist, small business, is that the big investors and the I in big business and the investors, they work for free for many years. They work for free for many years. Point number seven, whereas the E, the employee, S, specialist, small business, self-employed, they work to be paid. Point number eight from the book, the employee, the self-employed specialist, they are also generous. They give their time to do volunteer to charities. They also do pro bono worthy causes. Now, primarily, the E and the S, employee, self-employed, specialist, small business, their money is coming from their work, their job. They're earning their money. It is called earned income. Point number 9, the income of the E, employee, S, specialist versus the big business and the investors. The income of the E and the S is earned, whereas the big business, their income is passive and it's coming from portfolio. Passive means they are not trading their time for money. They're sleeping and earning money. Point number 10. This is the sandbox. This is called our life. A lot of us, we have a little bit of sand left in here. Why? Because majority, we've already given, it's already down in the bottom. We're working, trading our time for money. According to the book, earned income is the hardest income. This is our castle. It is the hardest income to protect from financial predators, from the sharks. This is our castle, our income. And earned income is the hardest income to protect from financial predators. Therefore, earned income is not the smartest thing to do. Point number 11, self-employed. They are not a business. Why? Because they have to work. It's called job. Point number 12. The E and the S, employee, self-employed, specialist, small business, if they stop working, then the income stops. There is no more income coming in. Point number 13. The job, therefore, is not an asset. Why? Because if you stop working, then the income stops coming in. Point number 14. By definition, assets, they put money into your pocket. And assets, it continues to provide you money even if you do not work. So those are the 15 points of making more money. So I hope you learned